another edition of Market Marauders. Be in the market, one trade at a time. First things first, smash that subscribe button down below. Like, comment, share. So, first thing, we're going to dive into the top three option picks for the week. So, for number one, we have ticker sign SPCE, which is Virgin Galactic Holdings Incorporated. So they've had a pretty crazy week. Been in the news a lot for a lot of things that are going on with the price fluctuation. If we look at their moving average 50, uh, it's 1642. The moving average 200 is 1172, and their current price is 3387. Now, this is the price that is directly reflected from Friday when the market closed. And depending on when you watch this video, the price will probably be different because I know it's going to change when when the market opens on Monday. So, go into another chart. We can see that they had, let's go to their 5 day, they had like a little run up. So they went from like 24.85, kind of went up a little bit. Uh, it peaked out around 41.72, and then went back down to like 33.71. So it's been fluctuating quite a bit, and I am going to dive into one of the earnings from last week. I mean, not from last week. The last earnings that they had. I think next week they have their earnings for the next quarter, but this is the previous one. So this is on their website, Virgin Galactic website. They have a couple business highlights, but one I go to is the third quarter fiscal 2019 financial highlights. So it says received customer reservations as of September 30th, 2019 for more than 600 people in 60 countries, representing approximately 80 million in total collected deposits and over 120 million in potential revenue as of September 30th, 2019. So they've gained some money from some people and some orders. And if you guys don't know what Virgin Galactic is, it's kind of like a company geared towards space, where people can go to space for like entertainment purposes. They have what they call their spaceships, which is like rockets that they've been testing out. They have a lot of R&D around their rockets, just making sure that they're safe for people and getting their flights correctly. So, going to the second bullet point, it says it received 3,557 expression of interest in flight reservations as of September 30th, 2019. So this is just people who are interested in, taking their flight to space. Cash and cash equivalents were 85.5 million as of September 30th. Revenue of 0.8 million and 3.3 million of the 3 and 9 months ended September 30th, 2019, respectively, which was generated by transporting scientific payloads and providing engineering services. So the money that they're getting's not even from uh, the main thing that the company is geared towards, which is entertainment and space transportation. So this is transporting scientific payloads and providing engineering services. So uh, another big number on here is they had a net loss of 51.5 million and 138.1 million for the 3 and 9 month in September 30th. So in 3 months they lost $51.5 million. So you know it doesn't really uh, matter that they gained $80 million in deposits and 120 in potential revenue if they've lost 51.5 and 131.8. You know, they're bleeding money quite a bit, and I think because of this fact, we're gonna see when their earnings comes out for next week that they're gonna be continuing to burn even more money. But that's why for I have them as one of my options for next week, and I think that a put would probably be the best option in this case. So the platform that I use is Robinhood. I have a link down below in the description where you guys can sign up. You'll get a free share. I'll get a free share if you guys sign up through that link, or you can sign up on your own. There are other companies that trading platforms that do options that I know of. Two popular ones are Tastyworks and Weeble, but Robinhood is the one that I use. It's just the one that I prefer. Just telling you guys there are other ones out there. For you guys that are new to trading options, there I just buy options. I don't sell options. But for buying options, they're calls and they're puts. So a call just means that you believe the market is bullish, which means you believe that the price is going to continue to go up past a certain point. And a put just means that you believe that the market or the stock itself is bearish, which means you believe that it's good. The price is going to go down and continue to go down past a certain price. So when going and doing an option, you're going to look for a couple of metrics. So one of the metrics is strike price. Strike price right here is basically the price that you believe that the stock is going to go to. If we look at this top section for puts, a put just reiterating, is you believe that the stock's going to go down past a certain value. So above this line, these are what you will call in the money options, which means their strike price has already been met by the current share price. So on this one, this contract means that $34 is the strike price, and the share price is 33.22, which means it already went down past the share price, the strike price that they predicted that it would go to. Now, when buying options, each option consists of a contract, and one contract is equivalent to buying 100 shares of the company at a certain price. So on this price, it says that you want to buy 100 shares of the company at $7.80 a share, which means the price that you pay on this option would be $780 for the contract. So you pay $780 for the contract, and you hope that it goes up and that you can sell it before the contract expires. That is where the expiration date comes into play. So an expiration date is the date that your contract expires, which means if your price does not get to this by this date, that it will go and basically expire, which means that it will go to zero, which means you won't get any profit from that contract. You can also exercise the contract, which means you can go and buy um, the 100 shares for $780 a share. Um, I personally haven't done that, but I know people who can do that. That is an option that you can do. Um, I usually buy the contract and see if it'll go up, and I'll try to sell it before my expiration date, and that's how you gain money. So let's say you believe that the stock's going to go down to $31. This is just a stagnant price based on the stagnant uh, price of the stock. Now, everybody knows that stocks are not stagnant and that they constantly fluctuate. So the closer that it gets to this value, the more that this will be worth. Hence why these are considered in the money options, because it's already met this price. And the prices above this line will always be more expensive than the price below this line, because it hasn't met this qualification yet of it being 33 dollars a share, or $32 a share, or $31 a share. So just keep that in mind, that when you're dealing with puts, all the ones in the bottom are out of the money options, and all the ones on the top are in the money options. Now, going to the same stock in comparison, we can go to calls. So calls is the reverse. So it's the inverse of what basically uh, st- uh, put is. So you believe that the stock's going to continue to go up to a certain price. So if we go to the top on here, these are all out of the money options. Now on puts, all the top ones were in the money options. But if we go on Robinhood's platform, all the top ones are out of the money options for calls. So it hasn't gotten to $34 a share. So then this will be considered out of the money. So the amount you would pay would be $675. Now, if we go into comparison, $33 is $735 a share. I mean, $735 a contract. So this would be in the money, and all these ones down here are in the money because it has gotten to this price for that call. So, in regards to um, my prediction or what I believe next week is going to happen with ticker sign SPCE or Virgin Galactic Holdings. I believe that the stock's going to continue to go down. I think it was fueled by, a lot of hype and a lot of millennial investors who believe that, the company was doing more than what they said they were doing. And I think, a company like Starlink is definitely a better buy, even though they haven't IPO'd yet. I definitely will wait around for that company because it is an offshoot of SpaceX. And I believe SpaceX has been doing more testing and R&D work, and it's just a better overall company than Virgin Galactic is. So that's why I think, once this next earnings comes out next week and, the numbers come out, then I think the hype will kind of be over and I think it's going to go back down to a realistic value. Now, will it go back all the way down to, you know, 28? It may not. It may go back down to like 29 and just hover, but I think it's going to go down in general. Now it's 52. It's 50-week high is 1642, so that will be the metric that I will use for my option. So if we go to puts, go the wrong way. If we go to puts, and we look at its 50, if we go back to its 50 moving average, then we can see that 1642. So I would start with around 17. And I'll just go up. So look at $17, it's $53 uh, per contract, and it just gets a little more expensive, as it goes on. Now it may drop all the way down a little further, but I think to be on the safe side, this is a good price, a good, bottom price to start at, and then just go up from there. I think your odds become greater, but they're also more expensive. So I think start at $53 for a $17 strike, or an $18 strike, or a $19 strike. I think this is a pretty good range or barrier for entry when it comes to buying a put for this company. So that's why I chose them as one of my top three picks for the week for options. So let's dive into number two. So for my number two pick for the week for options, it's going to be Morgan Stanley. Now, if we look at Morgan Stanley, they've been on an uptrend since about October, and then been on a slight downtrend after the news of their merger. So uh, if we go to look at their metrics, their moving average 50 is 57.78, and their moving average 200 is 45.73. So at their current price, they ended the week at 52.42. So they're a little bit under their moving average 50. If we go uh, down here and we look at their chart, if we go to their 1 day chart, we can see that it went down quite a bit. Their 5 day chart, we can see it dropped off quite a bit, starting, around February 20th range, February 19th range. Did it bounce back up? Then it fell down some more. Um, if we go to the article and see why that happened, on the 20th, they basically stated that they had an acquisition for E-Trade I think it was a $13 billion deal. This is the press release for it. Combined platforms will have 3.1 trillion client assets, 8.2 million retail client relationships and accounts, and 4.6 million stock plan participants. So it's basically gonna, like quadruple the size of Morgan Stanley when they acquire E-Trade. Now, I think, there's gonna be a lot of fall off when it comes to this merger because E-Trade was a platform that a lot of people used for, didn't really need a financial advisor. And Morgan Stanley was sort of the financial advisor of like the, really rich or wealthy people for asset management and wealth building. So it's kind of like two opposite sides of the spectrum coming together to make one company or, having one merger. But I think that it could work as long as Morgan Stanley kind of takes a hands-off approach to E-Trade. So I think it can work, and I think once we see more integration of the companies together and a plan for this merger of the companies together, I think that it'll be beneficial for both ends. I think it could lead to Morgan Stanley being, the number one trading platform or number one brokerage uh, platform for investing and trading. That being given, I want to say, if we go to trade options, I think a call would probably be the best option um, for Morgan Stanley. Now, it's going to take time for this to, iron itself out. So I'd say, April time frame would be enough time for that to happen. Now, we want to make an intelligent decision when it comes to this. So looking at here, their moving average, it's already down past their moving average 50. The moving average 200 is 45.73. So for my call, uh, I want it to be back up to where it was at. So I would say, you know, a call of like, um, 55, 57. Even the $60 call, I think are pretty good areas on this bouncing back to become profitable. $60 isn't that far away from where it was at. I mean, from where it's at. So I think, by April, that's a good time frame to have that bounce back to that value or spring up to that value. I think there are a couple of press releases away um, from that actually happening. So $60 by April. This is a $20 contract, so it's not that expensive when it comes to your average contract. If you want to play it a little safer with the higher strike price, one that's closer to its current share price, then you can go with the 55. But that's going to cost you $111, and you can buy way more contracts with the $60 strike price than you can with the $55 strike price. So, this is kind of the low end of the spectrum compared to, some of the other options, but I think it's doable. $20 isn't that much. For me, when I buy, I usually buy out of the money options. I usually don't buy in the money options. That's just me personally. That's just the way I trade. Um, a lot of people buy in the money options and expect them to go up or to double. I think it's just personal preference on that. In the money options are usually more expensive, so for me, I just don't. I personally don't buy them because I try to look for a deal in the market. I try to find a good way to budget my barrier for entry with growth. So you know with buying in the money options, you're paying a lot more for them, but you do have the potential to get, you know, a lot more as well because it's in the money. But, buying out of the money, I feel like to me has more potential because you're buying for a lower price. So your barrier to entry is lower. So it means your profits would be higher. Or that's the way I look at it. It may not make sense to a lot of people, but has worked for me so far, so I'm going to continue with that path. So if we go to my number three pick, I'm going to say is ticker sign SQ, which is Square Incorporated. Um, if we look at their moving average 50, it's 71.13. Moving average 200 is 67.64. And on Friday, they ended the day at 83.49. So if we go to another chart, we can see that they are back almost, well, back above where they were in July. So into July, end of July, beginning of August, they were in the 80 range, but they've bounced back since then after a lull in September. Came all the way back up to the 80 range. So I think they're doing pretty good. They have earnings coming up, I think next week. Yeah, next week on the 26th. So, they're probably going to rally even more around that. And their last earnings, if we go to, this is their quarter three earnings. We can see that they did pretty good, plus 44% year over year, plus 42% year over year. So this is for total net revenue. Gross profit was plus 42% year over year, and their net income loss was 29 million. Their gross payment GPV, gross payment volume, was 28.2 billion, which is plus 25% year over year. Adjusted revenue 602 million, which was plus 40% year over year, and adjusted EBITDA was 131 million, which is plus 85% year over year. So their metrics for the company were pretty good overall, and I think they'll probably duplicate this coming into the next quarter. So look for that next week, and that's why I have them as my number three pick. And I would say for a call would probably be the best option when it comes to that. Now these are a little more on the pricey side. All their calls are pretty expensive, but you know we can go out a little further to like March 20th, and their calls are a lot scarce. So if we go to March 13th, I think this is a pretty good one because there's a large variety of them. Um, and if we look at it, going and looking at this intelligently, uh, they're at 83. I would say around the 70s is probably good. That's where they're average. That's where it kind of start to lull at. All right, so I would say going on here that I would probably start around the 90 range and then work my way down. Uh, so what I was doing there, I was just seeing how low that the stock had gone, or where it started to begin to decline and where it peaked off at. So I think that it has the potential to go back up after its earnings, and I think 90 is a good price um, to where it could actually go to. So I would say 90 and then go down from 90. Yeah, they're going to get more expensive, but you start at 90, it's $234. Then you go all the way down to 83.50. That's $478. So there are different budgets for different people. So, you know, if you can't afford this one, there are always other options out there, like with Spice and with Morgan Stanley. Those are cheaper options than this one. So, the price point, everyone's budget is different, and everyone has different risk levels. So, this is, higher up on the price level compared to the other two, but for some people, it may be nothing when it comes to investing in this. So just to let you guys know, I'm not a financial advisor. These are just all opinionated for education to show people, hey, this is how you can invest in options and the prices that are available for options. So when people tell you, hey, you need $5,000 to begin investing, it's not true. Uh, You don't even need a couple $100. We'll go back to some of the other ones. There's $20 for an option. Everyone can spare $20. That's like the price of two people's meal at any restaurant nowadays. So, just don't eat out for that one meal, or just skip breakfast, and instead of eating breakfast, just eat lunch. So there you go. That's the $20. You know, cook something inside, cook breakfast, and then go out to eat for lunch. And there you go. You saved the $20 that you can invest into options. But for some people who money's not an option for them. Uh, this is another option for those people. Everyone has their different price ranges, but the most thing is to learn from uh, all of your trades. So, you may start with a small trade and just try to learn and see what you did right and what you did wrong, or you may try to start with another trade and see where you did right and what you did wrong. The whole point of this is learning and to try to make the best trades possible. That's why the slogan is beating the market one trade at a time. Make sure you try to learn from each trade what you did right and what you did wrong so that you can fix those things you did wrong and expound on those things that you did correct. Alright, so those are the top 3 option picks for the week. Hope you guys enjoyed. Drop a comment down below if it helped you. Give this video a thumbs up, like it, share it, hit that subscribe button down below, and I'll see you guys next time. Peace.